Enthusiasm in the oil market is gradually fading and the quotes are moving away from the recent highs. Lower oil prices and mixed dynamics in emerging market currencies triggered a sell-off in the ruble. Local market participants will focus on the Bank of Russia policy meeting. The upcoming correction in oil was supported by the reports from OPEC and the International Energy Agency. They both cut their demand forecasts, which had a negative influence on the market sentiment. The optimism about OPEC Plus output cuts starting from February 1st is getting weaker, and market participants begin to take profit. The decline in oil started yesterday as traders were evaluating the forecasts from IEA and OPEC. The downtrend continued on Friday. Brent oil futures edged lower by 0.8% in the morning trade to settle above $60 a barrel. The North American crude eased by the same amount. WTI futures contract with the nearest expiration dropped below $58 a barrel. On Wednesday, both oil benchmarks reached their peak levels since January last year. Global energy market is still oversupplied due to the coronavirus restrictive measures in many countries. This made the Organization of the Petroleum Exporting Countries revise its outlook for global demand. However, there were only some slight adjustments that are unlikely to keep pressure on oil prices. The current decline can be mostly explained by a correction. The energy market was setting up for a pullback already in the previous sessions. Thus, we could observe a cross pattern on Wednesday on the daily chart, which is a signal for a possible sell-off wave. Today, oil bears may attempt to assert strength. If the price breaks below $60 a barrel, the bearish trend will intensify. The nearest downward target for Brent is the level of $55 a barrel. The rally was too long. Oil may try to resume the uptrend only when OPEC Plus announces that it is not going to ramp up production in April. The fundamental background is not favorable for the ruble as it experiences moderate pressure from different factors. Oil is trading lower, the emerging market currencies are losing ground, and the US dollar index has resumed its growth today. Additional pressure comes from the market of federal loan bonds. First, it rebounded after the sanction rhetoric eased, but then continued to fall. Yesterday, it tested new yearly highs. Investors hope that the Bank of Russia will consider raising interest rates to support the OFZ. Market participants do not expect to see changes in the monetary policy. This scenario has already been taken into account in the current ruble quotes. Amid negative external background, the dollar-ruble pair jumped above the level of 74. Unless any positive changes happen during the day, the ruble is unlikely to win back its losses. On the contrary, it will depreciate more against the US dollar. However, the pair is expected to stay in the range between 73 and 75. Usually, traders prefer to take profit ahead of the weekend, which may push the ruble down. Besides, a 3-day holiday will start in the US, so the number of investors who want to close their positions may increase. Currently, the most important factors for the ruble are the threat of sanctions and the situation in the oil market. If oil extends its correction next week, then the ruble may become one of the worst performers on the foreign exchange market. It is possible that the US dollar may advance to 75 against the ruble. And that's all for now. Thanks for watching and stay tuned.